Welcome back to Golden Rule Radio, your market update for the week. And gold is moving up, silver's moving up. And what do you have to say about the metals, Miles?
Well, starting with gold, we've been talking about that 1204 number for months now.
And it hit right there.
It hit right at 1204 over this past week. We're up about $40 on gold. We're still between levels. I'd like to see gold break above about 1258 to show that we've moved past that next resistance level on the top end. But I do think we're definitely going to be moving into that here over the next few days. So
I'd agree with that.
Yeah, look for another 10, 15 bucks up in gold at least before it makes its next decision.
Silver is following gold back up above 16, and we're back in that pennant formation right now.
Yeah, after that big drop we had in silver, we had a pretty massive bounce, about $2.50 up almost 18%. I put this on the chart last week. I still think we need to see silver move above 1690. So that'd be the next resistance level I'm looking at to hit here over the next week or two.
We talked about platinum hitting the 900 level as a triple bottom last week, and that was also a fib level, and it's bounced off of that. I think it's about $20 higher. So that's good support for platinum, I believe.
Yeah, platinum bounced right up to that top support level. So again, love to see it break through that closing pennant, closing triangle, and show a little bit more upside here over the next month.
We've been talking about the palladium to platinum swap that makes sense to do if you're looking at a long-term chart of that ratio, palladium and platinum. And it just seems to defy gravity here with palladium just continuing to rise almost the same price as platinum. So at some point we will have a reversal of that trend where palladium's catching up, and it'll probably come down. But palladium has been really strong.
Yeah, I think there's a very good chance we might even see a higher high in palladium pushing up to 900. You know, again, the last couple of weeks we're within that 12-15% range of the all-time high on palladium, and we could certainly test it again. So while we are recommending getting out of palladium into platinum, and we've been through that extensively, so we won't go through it again, that doesn't mean we can't see a little more upside in the palladium, but I'd start looking at moving out now, like we've said.
Before we move on from the metals, I am really encouraged to see metals holding the support lines that we were looking at and not breaking down and crushing the constructive bases that we've been building with the metals throughout the last year and a half. And we're moving out of the seasonally weak periods, June and July, and we're moving straight into August with gold not having broken down completely, silver not having broken down completely. So I'm really bullish on it.
Yeah, I think we can give a big thank you to Janet Yellen and the Federal Reserve and the direction of the U.S. dollar. And we'll get into that here in a minute too, but we're definitely seeing some growth in almost every market except for the U.S. dollar right now. And I think a lot of that growth in the precious metals can also be attributed to the U.S. dollar declines.
Sure. Should I just quit saying that we could possibly see a dollar bounce up into 98 because it is just not happening?
No, and maybe we should just jump right to the dollar now before we hit the other markets.
Sure, do it. It's sliding down that slide we talked about last week.
Yeah, and we're coming into that first real big resistance level between about 92 and 94. So we'll throw the dollar chart up here, but I think this is where you're finally going to see your bounce, Robert. I think we could see it move up as high as 96, 98, maybe even as much as 100, which was a previous shoulder and what looks to be forming a head and shoulder pattern in the dollar. So I'd definitely be looking for a dollar rally here. The euro's been up strong. All the markets have been up strong. We've got divergence all over everything right now that we've also talked about in the past. So I'm looking for a little bit of a recovery in the dollar short term, but I did say a couple weeks ago I think the dollar's going sub 92, and I still do. And Robert said that we're going to see an interim bounce before that, and I absolutely agree with him.
Yeah, that interim bounce at this point, since I think we've officially turned bearish on the dollar, I think that interim bounce would be a contra trend to the major slide that we're going to see that breaks the dollar down below 92.
I agree, and that'd be the first major contra trend and something that could end up being a pretty long slide in the dollar. So keep an eye on that definitely over the next 6-12 months.
The thing I'd be looking at there would be the euro-dollar pair. Primarily, that's what the DXY index is based from. If you look at the percentages of what composes that DXY index, and the euro dollar pair is sitting there at 1.15 essentially, and that's a ceiling a bit. If you go back in the chart, it needs to break above that, and that'll correspond with what goes on with the dollar index.
Yeah, if you look at the euro-dollar pair, we've blown right through that top trend line, and man, the euro's really screaming up. Next real stop for the euro is 120. I think that's right where we see the euro top out at 120. The dollar hits 92.93, and then we have a short-term reversal.
Miles, you mentioned that 120 mark, and you have circled here on the chart that will show the gap in trading. And you have a gap there that looks like it would fill and come up right to that 120 mark.
Yeah, January 2015, the Swiss decided to strike out on their own, depegging from the euro. And as Robert mentioned, we've got a massive gap there that never filled. And we're coming right up to it. So gaps always fill. It may take a year and a half, 2 years later, but we are going to move back up to that 120 mark on the euro.
Also, just a brief note, putting pressure on the dollar index is also the British pound having strengthened. We'll move on to the equities markets before we talk about Yellen.
Yeah, the Dow keeps climbing, but we've hit that pretty hard recently. Big divergence, compressing trend lines. We've got the dollar coming into a low point on divergence. So if we see that reversal on the dollar, we're probably going to see a drop in the Dow. We've already talked about this the last couple weeks, so I'd definitely be looking to minimize exposure, maybe even look for shares heading the opposite direction.
If you're listening right now and missed the last couple of weeks of our show, Miles talks about and illustrates the divergence going on in the equities markets. I would highly recommend going back 2 or 3 weeks and looking at that divergence that he points out. Very fascinating, 7 months, 12 months of divergence before major declines.
Yeah, and the pattern we've seen over the last 10 years. The one interesting chart I do find this week is the Dow Transportations. We are seeing an expanding pennant right now. So I actually think we are going to see a move in the Dow Transportations up to the fabled 10,000 mark. That's going to line right up with the top trend line. And I think that might end up being just about it for the short term, at least.
Oh, man, this is going to be a lot of fun talking about Yellen, because we talked about how confident she was in no financial crisis, and then she uses a double negative to say that we can never be confident that there won't be another financial crisis. So which is it?
So the last couple of weeks, we did talk about Yellen's statements about their mastermind control over the markets. They did come and backtrack that a little bit. Now, I haven't heard a lot of other podcasts and news stations listening to that. So my only assumption is Yellen is a loyal listener to Golden Rule Radio. So we'd like to thank you for joining us each week. And we'd certainly like to thank you for taking our advice about not really using absolute statements like that. So Robert, what did she have to say?
Quoting her, she says, "I believe we have done a great deal since the financial crisis to strengthen the system and to make it more resilient." So that's
solid pat on the back.
Right. Yeah. And so last week we posed an idea where she may have just taken over control of the markets. And so that's why she's coming out so confidently, and she's telling us that anything that happens in the market, she's just going to throw liquidity at it, which, what would that do for the dollar?
Well, extra liquidity on the dollar means
lower dollar price.
Lower dollar prices. More dollars, less value. That's inflation.
This is so ridiculous. It's not building confidence in our supposed money leader in the States. And where this all ends, it just ends in more dollars being flooded into the system on the next financial crisis that we will have.
So as a follow-up to a story we touched on last week, major immigration issues in Italy and Austria moving troops to the Italian border, the Prime Minister of Italy, in response to this, in comical fashion, has come out and said, well, we're just going to give out about 250,000 free short-term EU visas to these immigrants. Doesn't surprise me at all. You know, if the immigration's our problem, nobody's letting us share it with the rest of the European Union to the point where they're even putting troops on our borders. We're just going to give them free legal permission to travel around the European Union. So maybe the rest of Europe wants to consider allowing Italy to leave within the next couple days before they fight the whole Italy thing we discussed.
You had a hard time saying Italy and not it'll leave, didn't you?
I did. I had to think about it.
It's coming.
Yeah. I don't know how I'm going to handle the whole it'll leave sentence over the next 6 months. Brexit was easy. It'll leave is hard. And Europe is dissolving.
Thanks for listening this week, and tune in next week. Miles has a good example with a client on a long-term basis.
Yeah, we're going to take a look at the long-term relationship and growth potential comparing the equities Dow to precious metals, and you might be surprised which is the better investment.
That's going to be fun. The best way to follow us is to click the subscribe button below this video, bottom left of the screen that says McIlvany Financial. Subscribe there.
And you can also follow us at ICA Gold on Twitter or call us anytime with your questions, 1-800-525-9556.
Have a good week.